In today's video, we're going to discuss how to get more performance out of our portfolio. We're up 5,000 for the day, 0.86%, but and the Dow is down 0.3, the Nasdaq's up 0.6, the S&P is at 0.15, so we're up 0.86. How are we outperforming? Because we're going for more tech exposure, like we've been saying in the past videos. My performance and value, as you can see here, we're up for the year. We're up 16%. The Dow is down 0.1. The S&P is up 9, and the Nasdaq's up 23. So we're trying to catch up to the Nasdaq, and we're beating the S&P, which is good. We want to stay in between the two, but we want to catch up a little bit more to the Nasdaq if we can. We're earning over 100,000 per year in dividends here, so we're trying to also get that number up. When Nvidia, Appley, and those other Yieldmax funds that have yet to register their dividends, when they actually register, that number will be higher, that estimated income number. So we, on the past video, we bought Coin, if you remember that video, and Coin, it's up 6% now. It was up 10 earlier, but we're making way for Coiny, the other Yieldmax fund that's going to come out soon. So we have Amazon, we're making way for AMZ, and for when that releases, and we currently have Appley and Nvidia and TQQ for our major tech plays. And Appley, we added 3K today too, because Appley, it's a significant part of the indexes. So if you want to get more performance, you need to add more Appley. And I've been saying this in past videos. I apologize if I'm being redundant, but this is how you get more performance. If you get more tech in your portfolio, you're going to get more performance, because the S&P is 20% tech almost. And Apple is almost 10% of the Nasdaq, and it's a large percentage of the S&P. I've showed you that in past videos. If we go to Zacks over here, you can see, how much the weightings are of, let's say, the Nasdaq right here, and you can see Apple and the Nasdaq is 12%. So these are very significant weightings, and if you want performance, you have to tie your performance to that, your portfolio to that index, the Nasdaq. So you try to get the best of all three indexes, the S&P, Nasdaq, and Russell 2000. This margin debt that I have, 258, is definitely helping get more performance. And the dividends from these funds are paying back that margin. And less than 3 years, my 100,000 in dividends, 120 approximately after those dividends register. That will pay down the margin debt of about 260,000 there. So, and I live out of this. I pay all my bills out of this. We use this purchasing power here, this 4 times purchasing power that every brokerage gives you. So that's how I get ahead in life and live financially free without a job. If you need help with living out of your brokerage account, using dividends, playing either Cornerstone or using margin, just let me know. Email me at akintod48@gmail.com. So yeah, Cornerstone, this is the drip here. This is how we get our performance. And we've said this in past videos. CRF is the NASDAQ version. And as you can see, these $6 lots, 6, they're dripped here at 15% and 18%. So that's how I'm getting their performance. But these funds move sideways, Cornerstone, CLM, and CRF. So we have to get more upwards, left to right movement. And I've been buying, therefore, TQQ and Fangu as a result. So Fangu also, it's very risky. Watch out for this one. I only have a small amount in this. It's up 6%. Does the top FANG companies, but times 3. And it's a risky E10. Watch out. I keep small amounts in that. And TQQ, it's a triple leveraged ETF. It's a tech ETF. So this is how I'm getting extra performance. We're already up 10% in this lot, and on the Fangu lot, we're up 15%. And that's not enough, okay? I wish I had perhaps 5K in Fangu, and I wish I had almost 10K in Appley. So I'm getting there. We sold some RYLD today right here, this 12.5 here. I had 15 in it before, so I'll continue to sell from RYLD, and I dumped some lower performing names today. That's where you see this loss from. But I immediately bought back and took that loss and applied it into a higher quality index in the Qs and in Appley, as you see my position there. So if you want your performance to be strong, you have to tie it to the indexes, and I'm just tying mine more to tech right now, but without reaching. Like Coinbase, when I bought this morning, Coinbase, it's way off its highs. So if it's a large percentage of the Cathie Woods ARK funds, which I'm trying to get more exposure to because that's tech, it's small cap tech, then look, it's not reaching. It's not like it's up high like Nvidia. It's still down low on a 5-year chart. Coinbase. So and then when we get Coney, that's gonna give us a lot of dividends, hopefully, and offset whatever happens with Coinbase. Coinbase is just to get us some extra juice going forward, because most of these Yieldmax funds are covered call. Apple, it's the same thing. Appley, I would have some Apple in my account to hedge against a gain in Apple, but I'm just going to make my position in Appley more substantial. And why? Because it is the S&P. It's 10% of the Nasdaq, and it's a large percentage of the S&P. So if you want that performance, just essentially buy Apple, but you can't have it all in one stock. You can't, so you have to diversify and buy the indexes. But when you want more targeted exposure within the indexes, you can buy something like an Apple, but just beware of it being at the highs. We've already showed this in past videos. If you want more information on how Appley works and these Yieldmax funds, please see my past videos on that. So Appley, yes, it's had a large move, and if we can get a dip in it somehow, then I'm gonna add to shares. I'm not gonna put a short on this one because it basically is the index. So I'm comfortable with however the index goes. So do I. If you can just stay performing in line with the indexes, then you will do well over time, no matter what happens. So all these stocks that I have in there, I make sure that the allocations are properly accounted for within the indexes. See my past videos on how I played each and every one of these funds if you're interested, how I allocate the money in each fund. So that's what I did today. And that's what we're going to do going forward, is we're going to sell from RYLD. Up top, I told you we're going to reduce that to about to maybe perhaps 5K. And we're going to sell from all these other funds too. We're going to cut these in half as needed as the market falls to add to more tech. But I doubt that we get that opportunity. The market is cheap, and but if we do get a pullback in tech, a sizable one, then I'm going to sell from these and then add more to Appley and the Qs. And that's my plan, to get more performance, okay? So I hope you like this video. Leave comments in the section below if you have questions on how I'm playing Appley or these Yieldmax funds or anything else I'm doing on my account. If you have more in-depth questions, email me. But that's where I suggest buying my e-guides, because you get my phone number and we can talk about anything you want. All 4 e-guides are $100, and each e-guide is $50. So I think that the value for all 4 is there. Many people are buying my $100 e-guides. I appreciate it, but some are negotiating, and I can appreciate that too. But where would the value be if the price was any lower for these $50 e-guides? So they're like courses. They're not books. And you have my number for me to walk you through anything you need. So anyway, once again, hope you enjoyed the video. Talk to you soon.